Hello, it's Tuesday, February 11th, 2020. I'm Steve Houston with Compass Communications, and I'm here again with Joe Terrell of Terrell & Company, and we're going to talk a little bit about the markets and investing. And Joe, we had one of those unforeseen events happen this year that happens every now and then that impacts the global markets. Nobody saw it coming, but the coronavirus. It's created quite a bit of volatility in the market, but markets were up yesterday, and they're up again today. What's your thought on this? Is this just going to be, in a year, a blip on the radar screen or something with lasting impact?
No, it will have a definite impact on first quarter earnings for many companies. Might bleed over into the second quarter, but the impact will just be first and second quarter of this year. After that, very little impact, if any.
Okay, so let's take a look at a stock that we talked about last month, American Airlines. And as you mentioned last month, you liked American Airlines, even though it faced the 737 MAX issue. Well, now it's got the coronavirus issue it's facing, which has impacted travel. Has that lessened your interest in American Airlines?
No, not at all, Steve. Investments are good investments if you can buy them at a very good price. The price of all the airlines came down over fears that people might not travel. They did put prohibitions against the airlines flying into China. That doesn't come off probably till late in April. So the percentage of flights that we like Delta, and we definitely like American because the price is down. Mm-hmm. It was down, as you mentioned correctly, because they fly to 737 MAX. People feel, oh, it's really hurting them. It's not. And now they have the coronavirus. They're not going to be able to fly into China. They're going to lose all that revenue. It's a small percentage of their revenue. It will open back up and they'll be able to do it. So yes, we like American Airlines, and we think this is an opportunity for us to continue to accumulate stock now that there's a second issue going against them. But just the 737 MAX will return. The coronavirus and the flights to Beijing and such places in China will come back.
Well, this is interesting because people, they tend to react to daily events in the news, trade the headlines, if you will. And these computer programs that do trading, they do the same thing, trade the headlines. And they tend to ignore the basic fundamentals that have been driving earnings. So do you see anything in this pessimism due to the coronavirus that has brought prices down? In other words, are there some opportunities in industries because of these depressed prices?
Oh, I believe there is. You are correct. One thing I'd like for our viewers to understand is the amount of hedge funds, major institutions, computer-driven funds. You're absolutely right by saying they trade the headlines. They really do. Knowing some people that are involved with them, openly saying, you know, our intention span might be 3 days, a week. So when they trade these headlines, they sometimes give you opportunities. And right now, because they're trading headlines over the coronavirus, if you are a good investor based upon fundamentals, you're not looking at what's going to happen next week. You're looking out to say, you know, a year or two from now, will things be good, and will this particular company I'm investing in be better off a year or two from now than what they are right now?
So what are some of those industries that have those lower prices?
Well, certainly the electronics industry, depending upon where you're at in it, is worried because China has stopped not only exporting some of the electronic products that they make, also importing some of the things because the plants are closed. I can't send my electronic products to China. The supply chain, if you will, is interrupted. So electronics is one, anything in the travel industry is another one. And one of the biggest ones is energy. They've just run the price of energy down, way overdone, predicated on the belief, well, China isn't going to use any energy because the whole country is shutting down. No, not the case. Yes, there are some oil tankers where the port's closed and the oil tanker can't unload, but this is not going to interrupt the long-term fundamental of the fact that all over the world, countries are increasing population and they're increasing standard of living. And with those two things comes using more energy.
Is there anything in the energy sector at all that piques your interest?
Oh, I think so. I think the midstream companies, which are the companies that transport energy, store energy, and do those particular type things, are ridiculous cheap. And a person can look at ETFs and closed-end funds. I stress closed-end funds that invest in them. You know, you can get exposure to 15, 20 different companies in that sector without having any individual risk, and they're all so cheap. They'll recover together, paying outstanding. The dividend distributions are well over 10% because the prices have gone down so much as people are fearful that particularly energy production in the United States is going to drop because the world demand's going to go off a cliff. That's not happening.
Okay,
Outstanding.
Thank you, Joe.
That's Joe Terrell, founder of Terrell & Company, independent wealth management with $720 million in discretionary assets under management. Joe, let's meet again in March and see where the markets are and see if people are following fundamentals a little better.
Yeah, we'll look at that. I want to add, Steve, just real quick, we still have a very positive outlook on Coherent. They've been hurt because it's China and electronics and et cetera, but this is a company we talked about on the previous month or so ago. Even though the stock price fell dramatically, it's recovered somewhat. We're still very positive on that company.
Okay. Thank you. And thank you for joining us.